Hello and Assalamualaikum. My name is Nasraimi bin Nawi. Today my group gonna present about the financial statement analysis of MFM Berhad between IOI Properties Group. So I'm gonna start first with company background of MFM Berhad. So this is their board of director. We can see here. So this is their company biodata. So we can see MFM is the first flour mills in the Malaysia. The opening of the mill was the realization of a long cherished dream of the mill's founder, Datuk David L.F. Sang, a well-known banker and industrialist of Hong Kong. Datuk Sang came from a family whose ancestor founded China's first machine-operated flour mill in Shanghai in 1890. So that's all for MFM. So this is the IOI property group company background. So this is their group CEO, Mr. Lee Yao Seng. So IOI property is specialized in property development in Malaysia with a legacy of more than 4 decades in property development industry. The group three core business segment comprise property development, property investment, and hospitality and leisure across Malaysia, Singapore, and Xiamen. PRC, People Republic of China. So I'm gonna go for vertical analysis. This is MFM horizontal and vertical analysis. As we can see on the screen, this is the balance sheet of MFM in for 2018 until 2020. So we can see here the total current asset is 51%, the same for the year 2018 and 2019. This is 51% from the total asset of the company. It just dropped 2% in year 2020. So the horizontal analysis of MFM is, we can see here that the total current asset is negative 6.21% from decrease from 2018, and in 2019 it increased and for 17.66%. In 2020 it just dropped for negative 3.34%. So this is the vertical analysis of IOI properties. We can see here, this is the balance sheet of the IOI properties. We can see the total current asset is around 27% in 2018 and 23.92% in 2019 and 22.94% in 2020. So this is the liabilities of the company. It is 43.97% in 2018 and 42.4% in 2019, and in 2020 it is 42.26%. So this is the horizontal analysis for MFM Berhad. This is for income statement. We can see in 2018 the total revenue increased by 1%, and in 2019 the total revenue for this company increased 11%, and 2020 it just record the no significant increase or decrease. So the net income from 2018 just dropped 70%, 74%. In 2019 the net income increased 143%, and in 2020 the net income decreased by 87%. So this is the horizontal analysis for income statement for IOI Properties Group Berhad. So this is the total revenue. The total revenue in 2018 decreased by 33%. In 2019 it decreased by 21%, and in 2020 it decreased by 4%. And for the net income, the company have 15% decrease in 2018 and 16% decrease in 2019, and 31% decrease of net income in 2020. So that's all from me. So I'm gonna pass to the next presenter of my group member.
Hi, I am Nur Alia Aminina binti Muhammad Saleh, and I am going to present about the ratio comparison between Malayan Flour Mills Berhad, MFM, and IOI Company. The ability of a company to make one-time payment to its creditor is determined within the variety of measurements called solvency ratio. The purpose of this analysis is to show the borrower's financial condition to lenders before allowing them to lend the money. The formula for current ratio is current assets divided by current liabilities. Looking at the current ratio, MFM does not rely on its inventory unlike IOI. There is significant drop of quick ratio for MFM compared to IOI, which is the ratio is slightly decreased. Next, we have to divide the cash with current liabilities to get the amount of the cash ratio. Cash ratio measures the firm's ability to pay its short-term liability with highly liquid assets. Based on the cash ratio, MFF can pay off its short-term debt with cash better than IOI. The last one is the net capital to current liabilities with positive ratio. Means that the company has a good operational efficiency. This has to divide between net working capital and current liabilities. Both of the companies did get the positive ratio on net capital to current liabilities. However, IOI is good operational efficiency compared to MFM. So, in conclusion, IOI Company is better in the solvency ratio compared to Malayan Flour Mills Berhad, which means that the firm has a better short-term ability to pay its debt.
Assalamualaikum warahmatullahi wabarakatuh. I am Atilia, and now I'm going to discuss with you about the efficiency ratio. Efficiency ratios are used by the analyst to measure the performance of a company's short-term or current performance. All these ratios use numbers in a company's current assets or current liabilities, quantifying the operations of the business. An efficiency ratio measures a company's ability to use its assets to generate income. The first efficiency ratio is inventory turnover. Inventory turnover measures how often a company replaces inventory relative to its cost of sale. So as we can see in the slide here, generally the higher the ratio, the better. So in MFM, we can see that the cross-sectional ratio from year 2018 to 2020 is good, as it is higher compared to IOI properties. A low inventory turnover ratio in IOI properties might be a sign of a weak sales or excessive inventory. Thus, I can conclude that MFM made a better sales than IOI properties. Next one is account receivable turnover. Okay, so account receivable turnover ratio measures the numbers of times a company collects its average account receivable balance. It is a quantification of a company's effectiveness in collecting outstanding balances from clients and managing its line of credit process. An efficient company has a higher account receivable turnover ratio, while an inefficient company has a lower ratio. In MFM here, we can see that the receivable turnover ratio across the year shows that the collection of debts and line of credit process among the client is effective. This means that the company is an efficient company. There's a slight difference of ratio for IOI properties in which the receivable turnover ratio is lower compared to MFM, meaning that MFM company is more effective in collecting receivables from the client compared to IOI properties. Next is fixed asset turnover. Okay, the fixed asset turnover ratio in general is used to measure a company's operating performance. This efficiency ratio compares net sales to fixed asset and measures a company's ability to generate net sales from its fixed asset investments, namely property, plant, and equipment (PPE). A higher fixed asset turnover ratio indicates that a company has effectively used investment in fixed assets to generate sales. So the analysis made here shows that MFM has a higher fixed asset turnover ratio compared to IOI properties, meaning that MFM has effectively used the company's fixed asset investment to generate sales compared to IOI. And the last ratio is total asset turnover. Total asset turnover ratio measures the efficiency of how well a company uses assets to produce sales. A higher ratio is favorable as it indicates a more efficient use of assets. Conversely, a lower ratio indicates that the company is not using its asset efficiently. The total turnover ratio in MFM shows a higher turnover ratio compared to IOI properties. Thus, MFM is more favorable compared to IOI as it indicates that MFM has used the assets efficiently to produce sales, while IOI show that the company did not use its assets efficiently in producing sales. As an overall conclusion, from the analysis that I have made between MFM and IOI properties, it is more likely for me to choose to invest in MFM as the efficiency ratio indicates that the company has a better performance in a short term compared to IOI properties. Okay, that's all from me. I'll pass the next discussion to our next speaker. Thank you.
Hi and Assalamualaikum. My name is Nur Shazlina binti Muhammad Zulkifli. For my part, I would like to tell you about financial leverage ratio. Financial leverage ratio are also called debt ratio and they measure the ability of the business to meet a long-term debt obligation. Thus, obligation include interest payment on debt, the final principal payment on the debt, and any other fixed obligation like lease payment. This ratio compares the overall debt load of a company to its assets or equity, showing how much of the company's assets belong to shareholders and creditors. If shareholders own more assets, the company is said to be less leveraged. If creditors own a majority of assets, the company is said to be highly leveraged. Financial leverage ratio help management and investors understand the risk level of the capital structure of a company. There are four types of financial leverage ratio, such as total debt ratio, debt equity ratio, and long-term debt ratio. Okay, firstly, total debt ratio. Total debt ratio is calculated by dividing total debt by total assets. Both of these numbers can easily be found. For example, as you can see on the graph that I provide, you will know which company is better in total debt ratio. I will compare two companies such as Malayan Flour Mills and IOI Group. In 2018, for Malayan Flour Mill is 0.62, in 2019 0.58, and 2020 is 0.95. But compare for IOI Group in 2018 0.44, in 2019 0.42, and in 2020 0.42, so that we can conclude MFN is slightly lower ratio than IOI. Next, I would like to tell you about debt equity ratio. The debt equity ratio is calculated by dividing total debt by total equity. The debt to equity ratio is considered a balance sheet ratio because all of the elements are reported on the balance sheet. Debt equity ratio for MFM in 2018 is 1.65, in 2019 is 1.36, and in 2020 is 1.41. I will compare the MFN with IOI group. In 2016 is 0.79, in 2019 is 0.74, and in 2020 is 0.73. So as we know, MFM has slightly lower ratio than IOI. So you can see on the graph that I provide. Next, the equity ratio. Equity ratio is calculated by dividing total equity by total asset. Both of these numbers truly include all of the account in the category. In other words, all of the asset and equity reported on the balance sheet are included in the equity ratio calculation. So I will compare two companies. As you can see, MFN and IOI group. For example, equity ratio for MFM in 2018 is 0.38, in 2018 is 0.42, and 2020 is 0.42. Meanwhile, for IOI group, the equity ratio in 2018 is 0.56, in 2019 0.58, and 2020 is also 0.58. So we can conclude that IOI has slightly lower ratio than MFM group. Lastly, long-term debt ratio. The formula for the long-term debt ratio is pretty much what you would expect it to be. You simply divide a company total long-term debt by its total asset. Both these figures can be found on a company financial statement. Okay, for long-term debt for MFM in 2018 is 0.07, in 2019 is 0.09, and in 2020 is 0.09. The comparison with IOI group is in 2018 is 0.29, in 2019 is 0.31, and also 2020 is 0.30, so that we can conclude the IOI slightly lower ratio than MFM. So you can see on the graph that I provide comparison with MFN with IOI group. That's all from me. Thank you.
I'm Banur Hazimi binti Wahmusinin. I would like to present about profitability ratio. Profitability ratio assess a company's ability to earn profits from its sales or operations, balance sheet assets, or shareholders' equity. They indicate how efficiently a company generates profit and value for shareholders. Profitability ratios include margin ratios and return ratios. Here I will present about gross profit margin, net profit margin, return on total assets, and return on equity. The first one is gross profit margin. Gross profit margin is the percentage of sales income you have left after paying for the stuff you sold. A lot of your sales income will go straight back out the door to pay for the goods or services you provide. Gross profit margin is the portion left over. When we look at MFM performance, it shows that their gross profit margin is getting down year by year from 0.1 in 2018, 0.1 in 2019, and 0.08 in 2020. compared to IOI margin, which is better than MFM margin when they got 0.56, meaning that IOI is having higher percentage of sales income better than MFM. The second ratio is the net profit margin, or simply net margin, measures how much net income or profit is generated as a percentage of revenue. It is the ratio of net profits to revenues for a company or business segment. Net profit margin is typically expressed a percentage but can also be represented in decimal form. When we look at MFM performance, it shows that their net profit margin is ups and downtrend year by year from 0.02 in 2018, 0.03 in 2019, and 0.01 in 2020. Compared to IOI margin, which is better than MFM margin when they got 0.2020, which is meaning that IOI having higher percentage of revenue better than MFM. The third one is return on total assets, which is a ratio that measures a company's earnings before interest and taxes relative to its total net assets. When we look at MFM performance, it shows that their return on total assets is ups and downtrend year by year from 0.02 in 2018, 0.03 in 2019, and 0.01 in 2020. Compared to IOI margin, which is lower than MFF margin when they got a 0.01%, meaning that MFM is slightly better than IOI. The last one is return on equity, which is the measures of company's net income divided by its shareholders' equity. ROE is a gauge of a corporation's profitability and how efficiently it generates those profits. The higher the ROE, the better a company is at converting its equity financing into profits. When we look at MFM performance, it shows that their return on equity is ups and downtrend year by year from 0.05 in 2018, 0.07 in 2019, and 0.03 in 2020, compared to IOI margin, which is slower than MFM margin when they got 0.02, meaning that MFM is slightly better than IOI. Lastly, we can say that MFM ratio is slightly better compared to IOI. It means MFM makes more profit compared to IOI. However, when we look at comparison ratios as a whole, we decided to invest in IOI Group. Thank you from us.